Okay, hello everyone. I would like to thank you for joining on for today's webinar. My name is Rachel Stedman. I'm the Customer Success Manager here at CPA for IT. Today, we're going to be discussing what's new for the 2023 personal tax preparation. And we're going to give you a lot of information pertaining to the latest updates and changes and how that will affect you. So just a little, of course, info about our firm, who we are, okay? So of course, CPA for IT, we are a chartered professional accountant firm, and we do specialize in individuals that are in that niche independent contractor market. And we've been in this industry for almost 40 years, so definitely been around for quite some time. And of course, as a member of the CPA Institute, we've also are a member of the ISO 9001, which means that, we have very specific standards and procedures and outline in terms of how we prepare our tax returns for our clients so that there is the optimal efficiency in the work that we get done. So let's now talk about enough about who we are. Let's talk about, what is the agenda for today? So in today's session, we are going to be talking about, again, as I mentioned, what's new for 2023. We're also going to be talking about, the main question a lot of individuals have is, do I have to file a tax return? We're also going to be discussing some important guidelines. And then we're going to tap into, how should you prepare your tax return? So in terms of, gathering that information to be able to submit for preparation. And well, since we're talking about gathering information, we'll also introduce you to our CPA for IT personal tax tools to really help you organize your documents. And then, of course, what everybody wants to know, when will I get my refund? So we will be diving into all of these important topic items. Again, for all the individuals that came on a little bit later, I do want to encourage you, if you have any questions along the way, please feel free to click in the Q&A. I will definitely try my best to answer as we're going throughout the session, but for sure, before the end of today's session, I will be able to get to all of those questions that you will have. So the next point, okay, so this is where, the meat of it all, where everybody wants to know what is new for 2023. So there are definitely quite a lot of changes that individuals need to be aware of. So some of those things would include everything from the increase in the unpaid tax penalties. There is also the COVID-19 benefits, which have expired. So we'll talk about those. There is also a new grocery rebate, which was introduced in 2023, so we will dive into that. There is also a much easier way to apply for your disability tax credit if it's applicable to anyone. Of course, the basic personal amount has been increased for 2023. We're also going to touch on the tax brackets, which have shifted to account for inflation, the TFSA and RRSP limits, which have increased, the new OAS limit amounts, and of course, the increases pertaining to the CPP contribution. So we are going to dive into all of these, but of course, the most important one is the fact that CRA has increased its unpaid tax penalty to 10%. It used to be 5% in prior years. It used to be 5%, and then they would add an additional 1% for each additional month that it is outstanding. Whereas for 2023, they've really doubled up on those penalties. So it is 10% penalty for any unpaid tax. So that's essentially the amount of money that would be due as of April 30th. And then they're tagging on additional 2% for each month that this amount is outstanding, and that is up to 20 months. So that is quite significant in terms of the doubling up on that particular penalty. This penalty will impact primarily, I would say, individuals that are operating as sole proprietors. Of course, if you're an employee, whether you're an employee at another firm or you are an employee of your own firm, there would have been sufficient, or there's an assumption at least, there would have been sufficient CPP and income tax withholding and paid your source deductions well before the issuance of the T4. So if there's any money owing to CRA, it might be quite minute. But for individuals that are operating as sole proprietors, where there is no source income tax that is withheld and submitted to the CRA, you are required to make that lump sum payment come April 30th. So, I mean, unless you are on installment payments and, hopefully that your installments outweigh the amount of taxes you would owe, this will primarily impact individuals operating as a sole proprietor. The next change is associated to the COVID-19 benefits which have expired. So as many of you might be aware, when COVID-19 hit back in 2020, CRA had introduced a variety of programs. There was the Canada Worker Lockdown Benefits, which offered supplementary income to individuals temporarily during the pandemic. There was also the Ontario Staycation tax credit, which was aimed at encouraging Ontario families to, explore within the province to help with the hospitality and tourism industry. And of course, there was the COVID-19 work from home expense. So all of these benefits have since expired and are no longer applicable for the 2023 personal tax filing. Now, the one that might impact quite a few individuals is the COVID work from home expense. So there were two ways in which you could benefit from the work from home deduction. The one way was being able to claim the flat rate up to $500 for the use of your home while you're working from home. And the other way was to utilize the T2200S, okay, which is the, the declaration of employment expenses during COVID, which will allow you a more detailed calculation of deductions. So although, again, the COVID-19 work from home expense, particularly the ability to claim the $500 has expired, the T2200S has shifted to the regular T2200. So if you are an employee of an organization and in the past your employer gave you a T2200S during the COVID period from 2020 to 2022, you can inquire whether they are shifting to now issue you a T2200. So the T2200 will still allow you to have that full detailed deductions of your home office. And unfortunately, if you were working at an organization that they did not offer the T2200S and you did utilize the flat rate 500, I might encourage you to have a conversation with your employer. Of course, I know a lot of businesses are trying to aim at having a lot more individuals come back into the office. But if you've been relegated to indefinite work from home or possibly have that hybrid option, I would strongly suggest that you do have a discussion with your employer to see whether or not they will provide that T2200 so that at least you can claim something if you have done so in the past. So another one of the changes and what's new for 2023 is that the government has introduced the new grocery rebate, okay? So this was introduced sometime in July of 2023, okay? And essentially how they determined individuals' eligibility for that is that if you had in the past in 2021 or 2022 been eligible for the GST HST credit, then you would automatically qualify for the grocery rebate. So the rebate is equivalent to approximately double what the GST HST credit amount is. So although this is great, it was introduced last year, individuals who did receive a GST HST, or I should say who were eligible for GST HST credit, would have already received the first payment in July of 2023. Okay. However, when we look at, eligibility for this, there is an income criteria for the eligibility. So if you are a single Canadian who earns less than $45,000 in a year, you would qualify for this. And if you have a combined family income of less than $65,000, then again, you would qualify for this. So essentially, anyone, any single individual making over 45,000 or any family income over 65,000, although this rebate is available, you are excluded due to your income tax brackets. Now, another one of the changes is the applying for the disability tax credit. So CRA has implemented changes associated to how you can process this tax credit. Notoriously, it has been a very lengthy process, but now CRA has allowed individuals to be able to access the My CRA account, and you can actually complete certain sections of the application through your My CRA account, and then you are provided a reference number. And then if you are required to provide information to a qualified medical professional or practitioner, then they can then complete the secondary part of the application for you. So there's no need to be printing anything or bringing any forms to your practitioner. It's apply online, get that reference number, and then provide that over to your practitioner. So that definitely will speed up the turnaround time frame to have this processed. Now, the basic personal exemption amount for 2023 has increased on the federal level to $15,000. So that has been steadily increasing year over year. Last year, it was 14,398. So essentially what that means is any income that you are receiving, the first $15,000 would be tax exempt from the CRA perspective. On the federal level, of course, as you know, there is both the federal and the provincial tax rates. But we'll dive into a little bit in terms of what that really means for you. But that is great that they are increasing that personal amount, and it will continue to increase for 2024 and moving forward. The income tax brackets have also shifted to account for inflation. So that's actually, a very good thing for individuals. I will bring up a little bit of I'll move over to the next slide to touch up on what that means for individuals. So there are some new brackets on the federal level, which has been introduced. So the adjustment for the tax brackets for 2023 is to maintain the buying power of Canadians as the price of goods continue to slowly, well, I would say a little rapidly, not slowly increase, but it definitely is getting a little bit higher. And the adjustments upwards means that Canadians on the edge of tax brackets might find themselves shifting into lower brackets. So I will circle back to what this means to individuals, as well as give you some information pertaining to, we have a bit of an example that we can provide so you can get some insights of what that means for you. So going back to our complete points, 1 second. And here we go. Okay, so continuing on, when we're looking at the TFSA and the RSP limits, which have increased, so which is great. So over the last few years, the TFSA has been the limit has been slowly increasing. When it was first introduced back in 2019, the amount was $5,000, and it has incrementally increased by $500. And as of 2023, it has now been increased to $7,000, which is good. So if there are any individual that had not contributed to the TFSA when it was introduced in 2019, and they were over the age of 18 back when it was increased, my apologies, not 2019, it's 2009, sorry, the TFSA was introduced, you would have an accumulated room or availability of $95,000. In regards to the RSP limits, so the RSP annual dollar limit for 2023 is now $30,780. Now, although it is important to remember that your RSP contribution limit is capped at 18% of your earned income in the previous year. So this means that the dollar limit is the maximum amount that you can contribute regardless of your income. So meaning if you have, a significant amount of RSP room available for many years and you are looking to make a contribution, a lump sum contributions, let's say you're in a particularly higher tax bracket in or in any tax year, I should say, but particularly for 2023, you can't just go in and, put 40,000, 50,000 in RSPs. You are capped at that $30,780, regardless of the amount of room that you have available. The next change, which is a very good one for, the senior citizens, is that the OAS, which is designated to provide retirees a source of income to support their retirement, okay? Typically, if your income is over certain limits, you might find that the OAS may claw back or even cancel your OAS in its entirety. So for the 2023, the taxable income has now increased to $81,761. So if you are of the age for OAS, and you are receiving any employment income under that $81,000 limit, then none of your OAS will be clawed back. But of course, anything over and above that, you should expect that there will be some clawbacks on that. The Canada Pension Plan, as well as the Quebec Pension Plan, so the CPP and the QPP, have also increased for the 2023 tax year by 6.5%. So it is quite a jump in terms of the increase. The maximum pensionable earnings for 2023 is now at $66,600 with a basic exemption of $3,500 for 2023. If you are eligible for, or if you are applicable for EI, that has also increased. But for individuals that are self-employed and, you are paying yourself a T4 from your corporation, the CPP, both the employer and the employee amount contribution, again, that increase is now at $3,754 for the 2024 tax year. 2023 tax year, my apologies, and you can expect another significant increase for the 2024 tax year. So, CPP, again, is slowly increasing. EI is slowly increasing. So I know a lot of clients might think, okay, well, everything is increasing. There are some tax credits which are being introduced and, there is a certain income threshold that CRA takes into consideration. So you may not be eligible for that. However, I will go back and jump a little bit more in terms of talking about when I was discussing the new brackets for the income taxes. So we did a bit of a calculation for individuals so that they have a bit of an idea, what does all of this mean to me? I mean, we can talk about the changes in the brackets, but you want to know dollars and cents. What does that mean? So we did a bit of a calculation where we looked at an individual who was generating $75,000 in 2022, as well as in 2023, so that we can compare what the increases are from the CPP, from the EI, if applicable, as well as from the income tax. So what we found that although the CPP had increased from $3,499 to $3,754, so which means that the CPP contribution amount has increased by $254 for the 2023 tax year. And if EI is applicable for you, that increase has also is now $49.71. So the combined CPP as well as the CPP as well as the EI, that is increasing. So most individuals might think, well, as a result, if I made $75,000 in 2022 or 2023, my take-home pay will be significantly less. But that is actually not the case. With the introduction of the new tax brackets, okay, what we've noticed is that on the same $75,000 income, you will actually notice that the income tax is reduced by $591 for you. So that's just the tax component. So the reduction in taxes is quite significant and also means that the increase in the CPP and EI, if applicable, is significantly less than the tax reduction. So even if you're generating the same income for 2022 and 2023, for an example of $75,000 income, your take-home pay will actually be higher in 2023 than in 2022 because of the adjustments to the brackets. So again, we always hear all these increases, or we hear about changes into the income tax, and most individuals automatically think that means I'm going to be paying more, but that's not necessarily the case. So I just want to debunk that myth that a lot of individuals might have. So we're going to be moving on to, the question a lot of individuals have: do you have to file your personal tax return? The simple answer is yes, 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 yes. We always encourage individuals to file a personal tax return. Most people think, well, if I did not generate any income, then I do not need to process a tax return. Again, that is not a strategy that we suggest for individuals. Now, your obligations to file may be a little bit different if you become a non-resident, okay? And for certain situations like that, we strongly advise clients to talk to your accountant to know exactly what the implications mean for you. But if you do not have any income in 2023 or any tax year, to be quite honest, we still encourage that you file a tax return, because there are many tax benefits which are applicable to individuals in that lower, 0 to lower tax bracket. So there are certain benefits such as the Canada Child Care benefits, the GST HST credit, guaranteed income supplement, the climate change incentive. So there are quite a significant number of tax credits and tax benefits that you would still be eligible for, even if you did not generate any income. So that is why we strongly advise individuals, go ahead, file that tax return. There is always a benefit available for you. The next thing that we're going to touch upon is the very, very important deadlines for the personal tax return preparation. So the deadlines for an individual filing a tax return with a T4 slip as an employee is very much different for individuals that are self-employed. So the conventional client that is generating income from T4, whether it's from a third-party organization or you are being issued a T4 from your own corporation, or you have any T5 slips, etc., your deadline to file your personal income tax return is April 30th. However, if you are a US citizen, your deadline is actually much sooner, which is April 15th. And another thing we just want to remind individuals, most people think, I may be a US citizen, but I live in Canada. I'm not obligated to file any US tax return, which is very much incorrect. In Canada, you are required to file personal income tax returns based on your residency. So if you reside in Canada, whereas in the United States, you are required to file tax returns based on your citizenship. So you could have been born in the US and your family moved to Canada, and from the age of 1 to current age, you've lived in you've lived in Canada, and you've, never lived in the United States. That is immaterial. If you are a US citizen, it is important that you do that US tax filing. For that, we strongly do advise clients, you want to again discuss with your accountant so you make sure that you are up to date on your US tax filings. But then for all individuals that are Canadian residents, your personal tax return filing, so that submission of the tax return to CRA, is due on April 30th. And the personal tax payment, if there's any money owing to CRA, is also due on April 30th. And again, as a reminder, if you do not file as well as pay any amounts of money owing to CRA by April 30th, that new 10% unpaid tax penalty will be applied to you. So you want to avoid that by all means. Okay, so we want to strongly encourage clients to get that personal tax return filing done as quickly as possible. And then if you are self-employed, okay, so that is if you are operating as a sole proprietorship, okay, your deadlines are a little bit different. So the deadline to actually file the tax return is June 15th. Now, that's the bit of the funny thing with CRA. They say, sure, you can, submit the information to us by June 15th. However, the payment owing deadline is actually April 30th. So that's why we always encourage clients that are sole proprietors. Again, even if your deadline is the 15th, try to get your tax returns completed so that you know, because the only way you will know how much money is owing is if your tax return is completed. So we want to encourage you to try and get that done before the April 30th deadline. So again, you're not hit with that penalty. Now, if you were provided installment requests from CRA from prior years, hopefully you have made all of those installments. If you are in a situation where your installment payments exceed what you might owe, that's great. But again, you won't know until you actually do that tax filing. Okay. And then, of course, if you are operating as a sole proprietorship and you have a GST HST account, then again, the GST HST return is due on June 15th with the income tax filing. But again, the payment is due April 30th. So again, that's the thing with CRA. They say, sure, you can wait till June, but they want the payments by April. So again, we try to encourage clients as much as possible, try and get that in as quickly as possible. So the next thing we're going to touch upon, the real meat of it, is how do you prepare your tax return? Okay. So there are many different things, many different steps, and we're going to walk you through those steps to really organize from, beginning to end what in terms of what needs to be done for the tax filing. So the first step, you do need to collect all your information, all your supporting documentation that shows your income and shows all of your different deductions and your credits. So of course, the documentation would include, for your income, would include anything such as your T4s, your T5s, if applicable, and then any deductions that you may have, such as donations, medical, et cetera. And I'll walk you through a little bit more of what the different deductions that you can write off, okay? But the main thing is that you do need to start collecting all of this information. You also need to select the software or service that you want to use to complete your tax return. So whether you'd like to do that on your own or you would like to utilize our services to have that done. Next, you need to make sure that your personal tax information is up to date. So that's very crucial. Everything from your address information, if your marital status has changed, it is very important that this information is updated. You can do so through the My CRA account, or you can do so by ensuring that the updated information is reported under your personal tax return before it is submitted to CRA. Okay. Then the next thing is, of course, to, report the income. So the T4s, for example, the T4s and the T5s, which you would receive, this information is mailed to you. So of course, T4, T5s are due to CRA by February 28th. Well, this year was a leap year, so February 29th. So which means you would have started to see those slips come in the mail sometime end of February, early March. T-slips are submitted to CRA and you are able to view those slips on your My CRA account. So in case there might be certain slips that you did not find in the mail, you can always log on to your CRA account. The only thing I would say, however, is sometimes CRA is not as quick in terms of populating that information. So, that's something that you want to make sure that you're just sporadically checking. But again, because there can sometimes be a delay for it to show on CRA, that's why it's important that if you know you've received certain sources of income, that you get the information directly from either your employer or if you have any T5s from your financial institution. Then you need to find out which deductions, tax credits, and benefits you can you can claim. So we will walk you through later on in terms of our personal tax checklist so that you are aware what are all the deductions that are available, and then see, okay, what of these deductions am I eligible to apply for? So once you have, reported your income and reported all the different deductions on your tax returns, and of course you want to submit that to CRA. So that is typically submitted to CRA electronically. And then, of course, lastly, you need to keep all the supporting documentation. So this is very important because you can be audited by CRA, and it is important that you keep track of this. Typically, we call the summer months, the CRA personal tax audit months. CRA tends to audit during the summer. And unlike businesses where sometimes you might find they take much longer periods of time, years to, do an audit, CRA tends to do audits relatively quickly. So you want to make sure that you have all your supporting documentation. So again, the only information which is reported that CRA has access to would be certain things like, as I mentioned, T4 slips, T5 slips, so any income slips. Okay, so they already know what you're making. Some slips which are also, or some deductions, I should say, which are also reported as certain things such as any RSP contribution that is reported. But everything else associated to medical, or if you have any work from home, employee deductions, or any of these different things, none of that information is submitted to CRA for validation. So that's why it's important that you keep these documents so that if CRA does audit you, that you have all the supplementary documents that you can show, these are my deductions. If CRA ever audits you and you don't have the information, so you had a child care expense and you reported it, but you forgot to hold on to that. If you're unable to provide that information, they can deny the deduction, reassess your personal tax return, and then you will have money owing to CRA. Okay, so next we're going to touch up on the ways to be able to help you get organized with the CPA 4IT tax tools. So these are what I would say new for CPA 4IT, or I guess new tools that we've introduced for clients. So getting organized for the personal tax return preparation is very important. The more organized that you are in providing the information to the accountant, the more efficient that we can be with your tax return preparation. And it also really helps you to make sure that you're as organized as possible, that you're not missing out on any deductions. So we do have a CPA 4IT personal tax info sheet that we send to clients every year. So what this info sheet is that it's allowing clients to, or I shouldn't say allowing, it is mandatory requirement that you provide us this information so we know your most up-to-date information when filing your personal tax returns. Sometimes we have clients say, my information is the same. I haven't moved. My social insurance is the same. Everything is the same. I'm filing, I have my same dependents and they have everything, and they think, well, everything is the same, so I don't want to complete this year over year. However, you do have to complete this year over year because every year CRA has new information questionnaires that needs to be reported. So for example, a few years ago, they introduced, the requirement to confirm, have you been incarcerated? Okay, there were years in the past where it's asked, are you, of Aboriginal or Indigenous? Other times they've asked questions pertaining to if you have and if you're mentally impaired. So there are many questions that they're asking. They also introduced recently this year whether or not you want to be registered as an organ donor in Ontario. So it is important that you are completing it because we cannot file your personal tax return unless you provide us that up-to-date information. Okay. We also do have our CPA 4IT personal tax checklist. So I will show you what that checklist is. So again, this is something that is submitted to all our clients every year. And with this, so let me just pull that up for you. Here we go. So the personal tax checklist we update every year, and it highlights all the different income and expenses that you may qualify for, you might need to provide in order to process your personal tax returns. So for T4s, we highlight all the different slips that could be applicable for you. What's new this year is the T4 FHSA. So that is associated to the new first-time home buyers plan that was introduced in 2023. Okay, we also go through information pertaining to the T2200, which is the Declaration of Employment. Okay, and we do provide you with a list of all the different expenses that you can include under that declaration. Any professional dues, charity. So there are quite a few of them. So what we do encourage clients to do is to go through this checklist and see what is applicable for you? What are some of these expenses that you can now deduct? So this, again, we've sent it all to all clients, and we can also provide it to individuals on today's session. And again, it's just a way to be able to help you to make sure that you're not missing out on any particular. It's more important to make sure that you're not missing out on any deductions more so than income. Income, you will know if you had income, but it's the deductions and anything that's new. So it is important that you make yourself aware of what these changes are. Okay. With that as well, we have introduced some worksheets. We have introduced the statement of real estate rental worksheet, self-employed statement of business or professional activities worksheet, the T2200 declaration of condition worksheet, the charitable and political donation worksheet, as well as the medical expense worksheet. So the purpose of these worksheets, again, is to be able to help organize you many times. And we've really created these worksheets just as a way to, help clients. We've also had feedback from clients that they're not sure what they can deduct, how to be able to provide us the information. So this is really catered to help you as much as possible. So I am going to show you what some of these worksheets look like. So I will pull up, actually, here we go. Okay, so I'll pull up one of these worksheets. Bear with me 1 second. Here are some of the worksheets. Okay, perfect. So this is an example of one of the worksheets. Okay, this is the T2200 Declaration of the Conditions of Employment. So again, that is for all individuals that are employees that may have received a T2200 form from their employer. So we've created this and made it very user-friendly. Okay, you're only required to complete the information in yellow. Okay, and there are different features and formulas. So once you input all of the information, it does summarize everything for you. Okay, so this is an example of one of the worksheets. You can put in all of your information. So for example, if you have any my apologies. If you have any expenses such as apprentice, beverage, etc., legal expenses, all of these things that you are allowed to input here, and it does summarize everything for you. Another one, here we go. Let me just come up, is the self-employed component. Okay, so this is a self-employed worksheet, again, where you can put your tax year, information about your business, information about your income, as well as all of your expenses. Okay, you can put it in here. And again, it summarizes everything. We also do have another tab on the end here, which talks about the expenses that you can deduct. So you can click on any one of these expenses and it will automatically, provide you a bit of summary. So just in case you're not sure, for example, what are the expenses that are included in supplies or office supplies? So we really make it very user-friendly for you. Okay. And as well, the rental component is, again, the same concept, where we want to be able to help clients so that if you have any rental property, okay, you can summarize the rental income as well as the rental expenses and have that summary. And this is really good for you just in general to have and be aware of what those income and those expenses are. And the more organized you are with providing us this information, it really helps us to be able to make sure that we are executing your tax return as efficiently as possible. Now, the other two worksheets that we have, I'm going to touch up on, are for the charity as well as for the medical. So I'll touch upon the charity in particular. So the charity and the medical expenses were actually expenses that, again, through feedback from clients and again, ways to improve. We noticed that a lot of individuals were not sure how to provide us the information. Okay, something like a charity deduction. If you sporadically make donations throughout the year, every donation that you have, you're going to get a receipt. And unless you are a monthly donor, then they will wait till the end of the year and give you your summary of what your total donations are. But typically, if you make a donation this month, 2 months from now, et cetera. So you start getting those slips bit by bit. So they can be, several slips. So we created this worksheet so clients can input all of the organizations and the amounts that they've paid for these specific donations, okay? Whether they are regular donations or political federal political contributions, or even if you've made any donations to any US organization. So again, you can complete it. There are different features and formulas which will give you summary. And again, you only need to complete what is highlighted in yellow if applicable for you, okay? And then lastly, the last worksheet that we have is the medical expense worksheet. So this one is very important because, again, individuals can have several medical expenses. So, if you think of it, most individuals, if you're maybe getting prescription, for example, it's typically one of the ones that have a lot of receipts. So if you're getting, a prescription refill every 3 months and you have 2-3 medications, you get that individual receipt for every single one of them. So, throughout the year, you can lose track, lose them, and it can be quite a bit. So imagine, a client sending us, uploading 20 different receipts like this for us for a medical expense and having to be spending the time to sort through and sift through that. So this worksheet is catered so that you can enter all of your information here. However, we've also included as well list of eligible medical expenses for your reference. However, what is important to note is that there are more efficient ways to gather some of your medical documentation than having to rely on those individual prescription receipts, or, for example, those individual maybe paramedical, massage, acupuncture, et cetera, receipts, or, that every dental visit that you have receipt. You can request from your pharmacist and your dentist to provide you with an annual statement of your prescription or your dental work. So that way, if your pharmacist can give you the full-on printout, it'll tell you exactly how much you paid, if you have any insurance, how much the insurance paid. So it gives that to you in a summary format. So even if you may have lost 1 or 2 of the individual receipts throughout the year, it does not matter. The pharmacy can provide that for you. And that also means when organizing it, you're only writing one expense here because you have everything in summary format. Same thing with dental. You can go to your dentist and ask your dentist to print you an annual statement from January to December. So all of your expenses will be in that summary format, which you can also include it. Now, certain things such as paramedical, again, massage, acupuncture, et cetera, some companies may or may not have the option for providing you annual statements. However, I would say if you do not have any insurance coverage, private insurance, you can rely solely on what they're providing to you. However, if you do have insurance coverage, I advise clients to log on to your benefits plan. And again, it can provide you a full summary, January to December. What is the total amount of your different paramedical expenses? And it's important to do that because, again, if you do have private insurance, if there's, let's say, for example, 80% which is covered and you've been reimbursed for, it's only the 20% component that you can include here. And again, you can really get that on a summary format from your insurance. Now, one thing that's very important to note as well pertaining to medical expenses is that there is a certain eligibility for you to be able to claim medical expenses. It's not just open to everybody. So the amount you can claim for medical expenses is the total expense you paid minus either 3% of your income or a total of $2,635, whichever is less. So what that means, again, we did a bit of a calculation that on an individual that makes approximately $75,000 a year, in order for you to be able to qualify, your medical expenses need to be over 3% of your income. Okay, so if that comes up to about, let's say, I think we did a calculation, it came up to about 2,500 and change. So even if you might say, for example, well, that's great. Based on my income and the 3% that I've calculated, my medical expenses come up to, let's say, you say $2,735. We'll just round it up by $100, right? And you say, oh, that's great. I'm eligible to claim. The only thing is that you only are eligible to claim anything which is over the $2,635. So which means if your medical expenses are now $2,735, okay, then you are only eligible to have $100 increase. Sorry, $100 of your medical is eligible for a deduction on the personal tax return. So we definitely always do advise clients to ensure that you are keeping track of your medical expenses and really seeing whether based on your income and the total expenses you do qualify. Because what we don't want to do, again, is as a firm to spend time to go through, again, as I said, all those individual receipts, and then it turns out that when we tally them up, you're not qualified for them. But at least this way, if you're able to summarize it right here, right away, we can determine for you whether or not you qualify or you do not qualify. Okay. All right, so these are all the different worksheets. So I have one question that has come through. So give me 1 minute. Let me try and pull that up. Okay, so one individual asks, hi, Takuya. Thank you for the clarification. Could you please advise me on what wasn't done enough with my previous approach to filing my personal tax return? I used to simply rely on a software merely to input my information without submitting any supporting documentation and completing my tax return. However, I found myself owing more in taxes due to lack of documentation, I believe. I'm curious how the documents such as my receipts I've been collecting might be beneficial or utilized to ensure the legitimacy and accuracy. Is it sufficient to keep these documents for reference, or should they actually be submitted along with my tax return? So this is an example of why it is important to hire a professional for your personal tax return filing, because there are so many different tax credits, benefits, etc., which are applicable, and day-to-day online software do not provide you those tips. You have to know for yourself. Okay, so that is why it is so important that you seek that proper help, especially if you have more than just a T4, T5, but you have a self-employed business, you have rental, maybe you're an employee with those work from home. You want to make sure that you are being able to capitalize on all the different deductions that are available for you. You cannot submit receipts with your personal tax return preparation. You must keep them for your reference, and it's only if CRA does inquire, then you can submit that over to CRA. I mean, we can, if you now find out that there are certain deductions that you've missed out on, can you have them amended? You most certainly can. I mean, if we're processing your 2023 tax return, we can do a bit of a comparison from your prior years to see maybe what you were eligible for this year that, is not a new expense or a new deduction, to see whether or not you missed out on those in the prior years and make that amendment. But it is possible, it is feasible. But if we're talking about just, sending us your return and which you've completed for us to explore to see what you would have missed out on, it's possible. I will admit, having to redo a tax return, if it's an amendment, there is some additional cost to have that done. But that is something we can at least give you some tips to be able to help you to identify what to look for. Now, next, question is, when will you get your notice of assessment? Okay. And that's, typically what everybody wants to know. Okay. So you can typically expect your notice of assessment within a 2-week time frame. If you do have access to your CRA account online, you would typically get an email from CRA when they will indicate that your notice of assessment is available. You can also get a notice of assessment a little bit faster online as well, which is an express notice of assessment. So again, that is always available online. If you don't have online access and you're using the antiquated way of through mail, CRA is phasing out, sending out notice of assessments via mail. So it is very important that we encourage clients to make sure that you have access to your online CRA account. Next is, when will you get your refund? Okay, everybody wants to know, when am I going to get my money? Assuming you're getting a refund. But if you are getting a refund, first of all, that's no better reason to get your personal tax return done faster. So the money is in your account much faster. So you can typically expect, as little as 8 days, you can get that refund if you have automatic serial debit to your account. Again, they are phasing out mailing of the checks, so it's very important that you make sure you have that up to date, okay? And then in terms of your balance owing, of course, any balance owing, whether it's just a regular personal tax that is self-employed with HST, they are all due by April 30th. You have to pay that full amount. If not, again, you will be subjected to that new 10% penalty. And then lastly, we're going to touch up on, the old way versus the new way of processing your personal tax return. So, the old antiquated way, gathering your information, printing out or keeping copies, dropping that off at an accountant's firm to process your tax return, and you come back in to pick up your hard copy, sign, and mail to CRA. Those are really the old antiquated ways. The newer way in terms of how we process the personal tax return is quite quicker, more efficient, and you can do it from home, the convenience of your home, in your pajamas. Okay. So the first step would be to upload your tax information to our client portal. So again, for all of our clients, we do provide you with emails with all of the reminders of your deadlines, the checklist, the info sheet to complete, as well as all the different deductions that you can have. As well, we do provide you all the different worksheets that you can utilize. And then you can upload all of this information to your client portal. We do encourage clients to try and upload everything all at one time for yourself and all families, rather than just sporadically. Because if it's, bit by bit, we might not know, we might start working on a tax return and it turns out that you said, well, you have some additional information that you're going to provide. So we do encourage clients to be able to do that all in one shot as we are notified, so that we can come into tax return. We will then process your tax return, okay? So what that means is that we will do a CRA data import, because we do request that all of our clients provide a CRA access. And that's actually very important, because you'll be surprised to know how many clients miss out or forget or don't even realize that they have specific tax slips. So for example, like certain financial institutions, they don't mail you your T5 slips. They would send this little message, your slips are uploaded, and sometimes clients forget to access it and they don't provide it to us. So we do rely on CRA to do that data import, to kind of cross-reference to make sure we're not missing anything, okay? And then we process the tax return on your behalf. And once a tax return has been processed, we then upload it to your client portal so that clients can review. If you're looking to have any discussions with the accountant, any questions that you may have about certain components of the tax filings, maybe something you've missed, we're hoping that if you've missed something, you'd have provided to us earlier. And then clients get to electronically sign, again, from the convenience of your home. You can electronically sign your e-file consent form authorizing us to be able to submit your tax return to CRA. So it is a relatively easy process for clients. I think the only component that, requires a little bit more work is just for you to make sure that you're gathering everything. But again, the more work pays off, because the more you're gathering, the more you're, double checking to see what you're eligible for. That can mean that there is, hopefully a nice tax refund for you, or at least reducing your tax liability. Okay. And then, so that's it for us today, in today's session, I would like to thank everyone for logging on for today's session. There are a couple of questions that have come through, so I will take a look at those questions. So Jerome asked, is there a cap or maximum you can claim for your medical? There is none. So there are certain individuals that, I mean, there are a variety of medical expenses. CRA introduced medical expenses associated to IVF treatment, or maybe there are, procedures that are not covered under OHIP, or insurance does not cover. So whatever medical expenses that you have and you qualify for, that is over and beyond, that 3%, which, they use to determine whether or not you're eligible, you can claim those, okay? And we encourage clients to claim those. If you have it, it is important to claim those expenses so that you can get a deduction. So the only cap that they have is that, again, you are only eligible to get a medical deduction if that medical expense exceeds 3% of your income. So that's the only thing. So what CRA is saying is, individuals that are in a little bit of a higher income bracket, okay, they increase, if you want to call it, the threshold for your eligibility, whereas individuals in a lower income bracket and have higher medical expenses, so you do get that deduction. Okay, so are there any other questions? I guess I will give a few minutes to anybody that has any additional questions. Oh, here's a question. How do I get started? Okay, so how do you get started? So again, we've sent all clients the reminders, and again, with all of the information pertaining to your checklist, the info sheet, your deadlines, as well as the worksheets. So I would encourage clients, try and gather your information as quickly as possible, upload that information over to a client portal. So again, within the email that we do send out, we provide you the instructions on how to upload it to the client portal. And once you've done that, we can go ahead, start working on the tax return and get that done for you as quickly as possible. Again, we really want to encourage clients, the earlier that you're bringing your tax return, the better. If you are waiting, that last week of April, of course, because it tends to be a bit of a busy time frame with a lot of volume, we may not always be able to guarantee clients that we can have the completed tax return done. But if that is the case and you're kind of waiting a little last minute, we can at least give you some estimates of money owing to CRA so that at least you can make that payment so that you won't get hit with that tax, that new increased tax penalty of 10%. Okay. All right. So I would like to thank everybody for attending today's session. I hope we were able to provide a wealth of knowledge and information about what's new for the 2023 personal tax year and give you all of the tips to equip you and tools to equip you to ensure that you're able to gather everything and to organize yourself as much as possible so that you can maximize on all deductions and also maximize on our efficiency to get the tax returns done and reducing your cost in terms of the tax returns filings. So again, thank you very much, everyone. It was definitely a pleasure. Have yourself a wonderful day.